Welcome to the Real Estate Explainer podcast, where we talk about anything and everything real estate. I'm your host, Brian Kiczula. Welcome back to another episode of the Real Estate Explainer podcast. I am your host, Brian Kiczula, a cost segregation specialist with Seg RX. Today we have Jim Peacock on the podcast, and we're going to be talking about Section 179D, Deductions. Jim, it's great to have you on the podcast today. If you could introduce yourself.
My name's Jim Peacock. I worked for the IRS for several decades. Started out as a field engineer, working audits for small and large companies. Generally, towards the bulk of my career, I worked on very large corporations, very complex issues. Back in the days when I was actually doing it, was research and development, along with depreciation issues, cost segregation, and then the latter part of my career, I became a subject matter expert with the practice networks, and I specialize in cost segregation and the Section 179D, energy efficient commercial building property.
What exactly is Section 179D, and how can it help property owners, designers, builders?
It is an incentive passed back in Act 2005. That was set up to incentivize building owners to make more energy efficient properties. It was bundled with a lot of tax credits, but 179D itself is not a credit, it is a deduction. And there are certain things you got to go through. A credit is a one-to-one credit on your tax bill owed, whereas a deduction goes into your taxable income. And whatever your tax rate is at that year is the amount of
so like depreciation, essentially.
It's lumped in with the depreciation issues because it basically covers Section 1250 property. And one of the advantages of 179D is you can get a deduction for certain 1250 property that isn't covered by any of the other qualified business property type, qualified improvement property.
All right,
and
so in that case, structural items is what we're talking about then. Yeah, structural
Yes.
items. Now, who would be doing Section 179D? If I was talking to a client and I'd said, hey, we have Section 179D, who's going to be interested in taking advantage of this?
It's going to be building owners primarily because, as we all know, having houses and cars and whatever, the energy and maintenance for your whatever is very high. Now, if a building, especially the older buildings that have incandescent or fluorescent lights and old AC units and stuff, those are going to be very expensive to run. So they're also expensive to upgrade. So the U.S. government at the time decided to give some extra incentives to building owners to make it a little easier for them to renovate their buildings, to make them more energy efficient.
So this is for individuals that go out and acquire existing buildings. They can renovate them and bring them up to speed, or they could build a new property ground up and install the energy efficient systems in the property.
Or if you've owned a building for so many years and you haven't renovated it, you don't have to go out and buy it. Just renovate your own building. And as long as it falls within the parameters set up in the code, then you could claim a deduction. So it's for all building owners and leaseors who install energy efficient commercial building property, as long as it is either owned by the building owner or allocated to the property.
Okay, and the challenge that I've seen when I've looked at doing these is just the complexity. How complex is it to gather the supporting documents that you need to show that you're meeting or exceeding the energy efficient enhancements that they're looking for? Is that something that you'd say is something that holds people back from taking the deduction?
Being on the side of the IRS, I didn't get involved with a lot of the decisions to go ahead and do the renovations. But yeah, a lot like cost segregation, if you're renovating a building or building a building, you have that information available while you're getting the bids together and have the engineers and architects on the same information line. You get that information together while it's being built, and then you'll have a lot easier time. Well, I believe you have a lot easier time making the study and making everything work right. So yeah, once again, it's very important to start this while you're designing the
Okay,
building.
now we're in a different administration. And let's talk about if the Section 179D is still relevant. Is it relevant for building owners or folks that are acquiring property?
Now, with the various incentives for bonus depreciation, the building owners go out and renovate, or if it's a manufacturing plant, there are certain benefits for doing certain types of renovation. And only parts of the building generally could fall within the bonus depreciation realm, being qualified improvement property for all the interior improvements that are done, and qualified production property, which is new with the OBBA. So there are certain parts of the structure, certain parts of the 1250 property that are covered by those. However, those are strictly confined to what's in the code for those particular types. 179D is for the renovation of a building that has HVAC and hot water, the building envelope, and interior lighting. And interior lighting only, not the lighting for the whole project or the whole building.
So what we're looking at is, in specifically what I was hitting at, is they are phasing out 179D in 2026. But we talked about it just before we hit the record button, is most of the time, if you're building a building, you've been working on this for years. So you have the plans, you have everything going in. So is it at the time that construction starts, or is it at the time it ends when they could take advantage of the program?
This particular deduction is taken in the year the asset is placed in service, just like for bonus depreciation. Even though the sunset is after June 30th, as long as construction begins by June 30th and construction is completed whenever it is, 2 years from now, the building owner can claim the 179D deduction for that
so
year.
this is really still powerful because what we're talking about is June 30th, 2026, and we're not talking about the 1245 personal property. We're talking about the building envelope. We're talking about the HVAC. We're talking about hot water, and we're talking about lighting. So most of these items are typically considered 1250 property or real property, so depreciated over 39 years. But now you can pull them forward and take that deduction if you use Section 179D, if they meet or exceed the requirements, the energy efficient requirements of the program.
Yes. Yeah, and it's because of the IRA back a couple of years ago, Inflation Reduction Act, it boosted the potential dollar per square foot up to $5.94. It started out at $1.80 a square foot, which was a nice incentive, but it wasn't necessarily worth the effort for some people.
Foot, multiply it by the building size.
By the condition space. There are specific guidelines you got to follow in the square footage calculation as well.
We'll compare it to QPP, QIP, bonus depreciation. Are you taking the full deduction in the year that the property was placed into service? Or is this similar to a step-down basis?
There's no step down, it's just a cutoff. But depending on the year it's placed in service, you get the deduction for whatever it should be. So I'd imagine that in 2027, 2028, they might go ahead and allow an inflation adjustment, so it'll probably be over $6 per square foot. But the bottom line is you get the deduction for the tax year it's placed in service, and whatever that going rate is for that year is your deduction.
So just as long as construction started by June 30th, 2026. And this is also available for all the property owners that may have built properties or renovated properties in prior tax years that haven't taken advantage of it. They could go back and do a look back study and pull forward missed deductions on these items. So something really to look at if you've built a property and you made specific improvements, again, to the envelope, to the hot water systems, to the lighting, and to the HVAC, then it's certainly worth taking a look at to see if you could pull forward some of those deductions.
And another good point, which you're making a very good point, was that the building owners can either file an amended return or file a 3115, change of accounting method. But if the designers who qualify for the deduction, we'll get into that here in a few minutes, they can only file amended returns. So their actual time frame is limited to the statute on their tax return. So they can go back, I believe, 3 years and do an amended return if they missed a 179D deduction.
Okay,
in those
and
years.
I don't know this. I'll ask: is on the form 3115? Is there a cutoff? Are they limited as well?
If you're a building owner, I believe you can go back as far as the life of the building, or in this case, 2006 when the law was first
so
enacted.
there's a lot.
Yeah, there is
These are
quite
items
a bit.
again that are traditionally depreciated over 39 years. We're talking commercial buildings, items that would be considered structural in nature, so you can pull forward those. Let's go ahead and jump in from an IRS engineering perspective. What typically happens when a tax return claiming Section 179D is selected for audit?
Now, when the IRS gets the return and they see a 179D, generally they'll either assign an engineer to the audit or they'll have the practice networks or the specialists assist the agent on it. The thing is that what they're going to ask for primarily is a copy of the study itself. Just like with a cost seg study, you don't have to file it with the return, but you should have it ready if you're audited. The engineer or the specialist will take a look at the study and see if there's anything about it that has red flags, which there usually are. They'll also check out the owner of the building, the taxpayer themselves, if it's them, but if they're the owner, and find out if the building qualifies. There are certain parameters that have to be met there. It's pretty wide, but it has to be in the United States. It has to be owned by a particular owner. You may have to go back and edit for some of this, but the tax exempt people were added. So a lot of things that we saw before the IRS 2, I think, we saw a handful of returns that had tax exempt owned properties, which were not allowed at the time. It was just government entities back then. So the IRA changed that to include basically all tax exempt entities as well as government entities to allocate the deduction to the designers. Okay. So there's basically 2 ways to get the deduction. If you're a building owner, you have to meet the requirements, get the certification done, make sure the calculation's done correctly, and make sure everything's up and up. And then beyond that, if you're a taxpayer claiming it and you're the designer of the property, then you have to get an allocation from the exempt owner, which up until 2022 was government buildings only, and now it's all exempt organizations.
Okay, so in this case, a designer can actually get the allocation from the owner if the owner couldn't take the deduction because they were exempt.
Yes.
A little bit more complicated. So this is something that I would imagine definitely slipped through the cracks, because I can't imagine that there's too many designers that are going back and trying to pull forward these deductions that they qualify for. So this is something that, again, if you know that you designed a building that had the energy efficient enhancements in it, and you were working with the tax exempt owner, they wouldn't take the deduction. So certainly you may want to go back and make some phone calls.
Absolutely. And that's something that I was really anticipating seeing a lot of, especially in the tax exempt areas. The fact that a designer can actually claim these things. Most designers are architects and engineers who are working on these projects, and a lot of them specialize in a certain type building. If one particular architecture firm worked on a lot of elementary schools, that's a pretty good indication that they could qualify for the deduction if all the other requirements are met. Same way with hospitals and other courthouses, that sort of thing. Now, with tax exempt entities being part of the group that can allocate the deduction, you have hospitals, you have various charitable groups that own properties, that sort of thing. So it's a much wider net for the deduction.
Is it going to offset general income? It's a deduction against income.
Yeah, for the designers themselves, there is a special requirement there that they have to basically deduct or reduce their ownership in their own company. So whenever they sell their shares or whatever, the tax will come then as I believe, a capital
Okay,
gain
so that's
at
how
the
they're
time.
put. I got it.
Yeah, you'll have to ask a revenue agent or accountant for
Okay.
that.
Yep. And what are some of the most common mistakes or weak areas when you're reviewing a Section 179D study?
There's been a lot, quite honestly. Actually, I wrote them down here. Well, we talked about sometimes the building's not eligible. There might be certain things about it that don't let it qualify. If it's a residential property under 4 stories, it's not going to go. We saw some dormitories that could fall into that category. Wrong tax year. That was the people didn't quite understand that it had to be done at the time it was placed in service, and their tax year they missed they put it in the wrong tax year before or after, depending on how that would fall out. One thing we hadn't talked about yet was that the whole idea of getting the certification done falls within ASHRAE standard 90.1. It's the American Society of Heating, Refrigeration, and Air Conditioning Engineers. That ASHRAE has been around since the 1800s, I believe. And Congress actually went to the standard to say, okay, we want to model this deduction under this thing. In Notice 2008-40, gives the IRS requirements that fall within the guidelines of ASHRAE standard 90.1. I know I'm getting into some heavy details here, but to get the deduction, you must follow the ASHRAE standard 90.1, but also know that it's limited to the systems explained in the code and the method in Notice 2008-40. That's basically the heart of the issue, is following ASHRAE 90.1.
Yeah, it's getting the certification done correctly so that when you're reviewing it or when the IRS is reviewing it, they're reviewing the accurate certification. And that ties back into supporting documents, your work papers. So it's really making sure that you have the documentation. So if you're installing a new HVAC system, they're going to want to see what HVAC system you installed. You're going to need that information in the file.
Yeah, there were times when I was with the service where I would see the qualified individual who's a licensed individual in the area or in the state that the property's placed in service. We would get their information and find that sometimes the inputs didn't really reflect what was on the plans. For instance, there may have been 10 split units in the system that were on the plans and only 1 or 2 were in the modeling. That obviously is a big red flag. We had to straighten all that out. So yeah, there are very strict requirements under the ASHRAE standard that need to be followed. And the IRS has their own on top of that. Those must be done. And certification has to be done by both the building owners and the designer.
Yeah, and that was one of the challenges that I've seen when I was looking at the program, is trying to unwind this years after the work was done. So we're going back and we're looking at doing look-back studies on a property that was built or renovated a number of years ago. And it's actually the information that we need to document it. So I think, and this comes back to same thing at cost segregation. We really want to tie the numbers back to what's actually on site. So it's just really keep detailed documents. And I think that starts with it starts at the very beginning with whoever's designing the building, and it follows through with your contractors and your subs. Just make sure that you're keeping that information so that if you're looking at getting the Section 179, that you're just documenting it. But that also goes with QPP, QIP, any type of bonus depreciation. It goes with different asset classes, depending on the type of property you acquire. Looking at the buildings on the car wash and really trying to understand, okay, what's really happening in this individual building, because it's car washes. Let's say that we're grouping them under asset class 57.1. So it's a car wash. Does that mean we can take the entire project as a 15-year asset? Not at all. So you have to look to see what's going on in the individual buildings. So if you have a building with the office, bathrooms, maybe a little market, that is not a 15-year asset. So we have to look at that as a separate structure and then really identify what's in it. I think it's the same with any type of, whether it's a tax credit, deduction, or you're looking at accelerating depreciation, it's identifying the assets.
Absolutely. Yeah. And identifying and recording them properly and having them ready 2 or 3 years later when the IRS
And we had
shows
talked
up.
about one of the biggest things when it comes to, let's say, the IRS, and you would be the subject matter expert there, it's if they don't understand what they're looking at, they're probably going to kick it all out. I would say if you're getting a study, whether it's a cost segregation study or any other type of study, read it. And if you can understand it, then someone else could probably understand it as well. If you're looking at it and you can't figure out where to tie numbers back to, then most likely, if you're involved in an examination, it's just going to get thrown out, or you're going to get hit with a ton of IDRs in the exam.
The clearer things are, the less IDRs, the less IDRs, the quicker the audit generally goes. So you don't want some highly qualified people running through stacks of returns and stuff. When you're not answering questions, they go back and just go look at the return some more and find other things. You really don't want that happening. You want to answer their questions as soon as as soon as they ask them and get them on to the next thing.
For me, it would be, I've got to go to the closet in that extra storage room, look for that blue bin that has all of the manuals to the hot water heaters, HVAC systems, and everything else. And really, that's what we're talking about. It's coming down to what model or what type of piece of equipment was installed in the building. One of the things, again, just to restate it, is the Section 179D is not dead. So if you have a property that is under construction, one that you've renovated in prior years, or one that you're just starting construction on prior to June 30th, 2026, this may be a real opportunity for you to take the deductions on items that are otherwise straight line depreciation assets. Mm-hmm. Jim, what else would you like to add to the conversation?
But one of the things are two things, actually. The IRA came up with a new path towards the deduction that is 179D parentheses F. It is for the retrofit properties. And the way you calculate that is basically the engineers or architects who designed the property take a energy use measurement within a year from the time that the new property is placed in service. So maybe they take a measurement of a full year, the full calendar year before the date construction begins. And then after all the renovation is done, they take a measurement a full year after the construction is completed. So you have 2 different years to as a standard of comparison. And then that, if it meets the requirements in the code section, then they get the deduction as well.
You're proving the energy enhancements to the building.
If it meets the energy efficiency requirements, then they get the deduction. The only thing is, the deduction's claimed in that following year when you make the final measurement. So there has to be 2 full years of comparison before and after.
That would help the individual that doesn't have all of the documentation, maybe.
That could, yeah.
Perfect.
I believe it's for after whatever the enactment date for the IRA is.
And then now that you're no longer with the IRS and you have your own consulting firm, what services can you provide to them? When would they reach out to you?
I've set it up to where I don't actually do the cost segs or the 179D studies myself, but I use my experience as an IRS auditor to go through various studies or various information that a taxpayer or client may have to put a study together. And I'll tell them these things this is very strong. This needs some work. Basically look at it exactly like an IRS engineer would if you were audited. And I could help you shore up your study itself or your templates for future work, that sort of thing. So I provide a review service of cost segregation and 179D
Would you be able to help a client who is currently in an audit scenario if they were looking at defending a study that had already been completed, or at least review it to make sure they could claim the deductions or depreciation that they are legally allowed to claim?
I don't have an EA. I'm not a CPA, so I can't represent the client to the IRS, but I can advise on what sort of things, what's going to happen in an audit, what they're going to ask for, how to answer IDRs, and certain things they can do for future work that could help them make better recommendations or better decisions on this.
What I'm talking about is if you had a scenario where you had a study done and it was rejected, so they just kicked it out and said, we're just rejecting it. That's something that you could step in and look at and say, let's look at the individual items and argue points back.
Yeah. I could tell them I wouldn't argue with the IRS, but once I get if I get a rolled agent designation, I could. But I can coach the individuals on how to deal with the questions asked and how to address the IRS on certain things. There are a lot of different ways to get through an audit. There are certain things that can be done that could alleviate a situation. Everything within an audit is basically boils down to people. The people you're dealing with, the people are on both sides of the table. So it's basically understanding the requirements that they have to meet and trying to find something within the facts that you found that'll help your client.
Perfect.
So,
and then if the listeners want to reach out to you, what would be the best way to get in touch with you?
My LinkedIn account is pretty active. My email account at jpeacockcsa.com. That's jpeacock Cost Seg Advisors. I do have a website, so you can reach out through either my website, that email, or the LinkedIn
Perfect.
account.
Well, thank you for jumping on the podcast today.
Sure. Thank you, Ryan.
If you'd like to get connected with today's guest, log on to realestateexplainer.com and click the Get Connected button on the homepage.